and welcome to AusBiz on this Monday morning. This is the Global View. I'm Andrew Gagan. Good to have you with us. Let's first check what happened on Friday. A broad-based sell-off there. That's given looking ahead to certainly what's going on as far as Donald Trump's plans for tariffs to be revealed on Tuesday US time. That's Wednesday morning our time. Wall Street stocks ended sharply lower, led by the mega cap there on renewed inflation fears, with a measure of underlying prices increasing the most in more than a year. And the volatility index rose to a one-week high. The S&P on track for its first quarterly decline in 6 quarters, while the NASDAQ set for its biggest quarterly drop since 2022. Inflation and tariffs, those concerns there, sending shares lower on Wall Street, with the most valuable companies, including Apple, Microsoft and Amazon, all losing ground. The gold miners, though, they rallied on higher bullion prices related to the trade war concerns, and investors continue to seek that safe haven. Shares of Lululemon plunged after the sportswear maker lowered its annual forecast, citing unpredictability surrounding tariffs. And Nvidia-backed CoreWeave shares closed flat after opening below their offer price in its NASDAQ debut, giving the AI infrastructure firm a valuation of some $23 billion. Let's catch up with what's going on at a macro level, and US consumer spending rebounding a less than expected 0.4% in February, with spending at non-profit institutions plunging almost 16% amid the Trump administration's efforts to downsize the government. And stagflation fears have increased, with the February PCE, a measure of underlying prices, increasing by the most in 13 months, rising 2.5%, matching January's rise. Stripping out the volatile food and energy components, core PCE, the price index rising 0.4%. Meanwhile, consumers' 12-month inflation expectations have soared to the highest level in nearly 2.5 years, in March to 5%. Well, US Treasury yields tumbled on Friday as investors assess the likely impact on economic growth from President Trump's tariffs, combined with rising inflation. The yield on the 10-year note fell around 11 basis points to 4.25%, and the 2-year was down to 3.9%. And the US dollar weakened on growth concerns ahead of that planned announcement by President Trump on reciprocal tariffs. The Aussie trading at 62.8 US cents. And Bitcoin has fallen back to around $82,500 US dollars. On the commodity front, oil prices fell on Friday, and concerns that a trade war could spark a global recession. Brent crude futures 0.5% lower at $73 a barrel. Copper was up slightly, iron ore little changed at $104 US dollars a tonne, and gold prices surged to another record on Friday as investors flocked to the safe haven asset amid fears of a global trade war. US gold futures up 0.8% to $3,114 an ounce. So let's get across what we're seeing on global markets at the moment. Greg Smith joining us from Devon Funds Management. Greg, welcome back. Good to see you on this Monday morning. How have you opened there in New Zealand?
You too, Andrew. Great to be here again. We're sort of open lower. The NZX 50 is currently down 0.6%. We did have quite a good week last week. The NZ 50 was up around 1.4%, so there was that. But yeah, we're probably underperformed globally so far this year. But yeah, it started off a bit on the back foot. Most of the large blue chips are sort of in the red to varying degrees. Fish and pike were down 0.7%. Obviously, there's a bit of uncertainty about how they're going to be affected by tariffs. I've got a lot of manufacturing operations in Mexico. They're our biggest exporter, and obviously our biggest name on the index as well. So it's sort of weighing on proceedings a bit. But yeah, a bit of a soft start to the week.
Yeah, of course, that comes ahead of these planned reciprocal tariffs to be announced by President Trump on Wednesday morning our time, essentially. So obviously that has global markets nervous. Also, we did get that read on inflation in the States. Those stagflationary concerns are certainly increasing.
Yeah, that's certainly there. I mean, I suppose you could still say that the world's largest economy is still at the moment quite resilient. You might have seen jobless claims have sort of been pretty varied, but generally the employment market's sort of holding together. The consumers sort of holding together as well for now, but obviously clearly being a lot more selective. The trading down. You mentioned the Lululemon results. That was a very weak guidance there for the current quarter. But I suppose what is interesting is how the consumer might react, and is already reacting in terms of the outlook for inflation. So you mentioned that University of Michigan report. We've got inflation, long run inflation expectations the highest since 1993. What was it? Sentiment dipping there, and of course we had the core PCE, which is what the Fed looks at, coming in hotter than expected as well. So this is all going to be very relevant. We saw US savings as well, consumer savings tick up as well, according to that Michigan report. So they're battening down the hatches, and basically it's anticipation that we're going to see sticky, if not higher inflation. That's going to be very relevant. When you talk about stagflation, obviously we need unemployment to be rising. Obviously, ideally one that scenario, and that's something obviously the Fed will want to avoid. But I think given, I suppose, the tariffs are a bit of a moving feast at the moment. We've got that date. We've got the Liberation Day on Wednesday, of course. But will there be any leniency? Will there be any exceptions? Will it be broad-based? I think it's still a bit of a moving feast. So no surprise. Probably a lot of the central banks are looking to adopt a bit of a wait-and-see approach, as are investors.
Well, and you mentioned unemployment being key there. In fact, we've got some jobs data out of the States, which is going to be very important for markets this week.
Yeah, that's right. We've got the non-farm payrolls. We've got the JOLT support as well. And that's going to be key, along with any revisions, of course, sometimes are sort of glossed over as well. But generally the jobs market has been holding together. It's been led by healthcare. What's going to be quite interesting this time around is what Elon Musk and his team are doing. What sort of impact that's going to have, because government sort of held up the numbers as well. For a while, so that looks like it's changing, and that won't be without impact as well. So I think it's just really interesting, as well, the reactions that we're seeing from trading partners as well, and obviously how that will then impact the economy. We've said Europe are prepared to work with them on value-added taxes. Canada have reached out, but they're talking about reciprocal tariffs. So this is all going to have an impact, and particularly potentially a cost to the US consumer. I thought it was also interesting what Trump was talking about, saying that he's putting these tariffs on the auto sector but doesn't want the automakers to raise prices. So not sure how all that works. But those non-farm payroll numbers will garner close attention as usual.
Yeah. Meanwhile, locally, we've got the RBA meeting tomorrow. Expectations they're going to stay on hold, perhaps with a view to another cut in May. Interesting, because we're in the midst of the election too, Greg. So lots to consider there.
Yeah, absolutely. I think again, it's sort of a wait and see. Australia's inflation is within the target, so there's a big box tick there. But there's other factors. How's this all going to play out in terms of inflation? We've got our own central bank meeting next week as well. There's a bit of anticipation around that. Our economy is probably crying out a bit more for sort of more rate cuts than Australia's is. But how does it play out? There's still that argument that a lot of product from some of America's trading partners finds its way to these shores and actually has a deflationary impact to some extent. And ultimately, obviously, for Australia, a lot of it's about iron ore anyway. So I think the RBA, I think they remain on hold tomorrow. I think obviously there's 70% probability of a rate cut at the next meeting thereafter. But I think most central bankers are sort of stepping back and just sort of going to see what this week brings, really. But there could be that deflationary argument. So I'd be interested to see what our central bank says next week, and they're going to have a bit more clarity than the RBA when it meets tomorrow.
Greg, corporate-wise, what are you seeing on your side of the ditch? I do note that Auckland Airport set to discount its prices for passenger charges. What is that at the behest of the Commerce Commission report there? Yeah,
that's absolutely right. I know the CCC has been pretty active on your side of the Tasman, but our regulator here has been looking into price setting by the Auckland Airport. So that looks at between 2022 and 2027. So they've claimed they've overcharged passengers by $190 million. They basically said there's money needs to be spent on infrastructure and additional capacity. We're doing a lot of capex here in terms of combining the domestic and international terminals. but they're basically saying it's too much. So Auckland Airport, they've come out and said they'll discount passenger charges by around $1 for regional travel, $1.70 for domestic jet travel, and around about just less than $5 for international travel to just under $40. So they're trying to sort of. I guess I'd argue that they don't overcharge, but the Commerce Commission has found otherwise. So sort of reached a bit of a middle line there. And yes, it's a bit of a negative short-term outcome for the airport. Those shares are down just over 2%. But what is going well is tourism. Tourism's going very strongly over here. We've got a weaker currency, so that's good. Good for the airport and our tourism sector in general.
Yep, we keep seeing those ads to come on over.
You got to do it. You got to do it. It's a cheap time to come.
Indeed.
Whether it's winter or summer, we're open.
Yep, fantastic. Greg, thanks for joining us from Devon Funds.
Cheers, Andrew. Bye.
Let's refocus on what we're seeing locally. Where we're likely to open on the, we'll take a look at ASX futures. In fact, sharply lower beginning to the trading week, it would seem. That's off the back of those sharp falls we saw on Wall Street in particular on Friday. So currently off around 1.1%. Stay with us. We're going to get right across it in just a couple of minutes' time.